The most interesting thing about today, in my opinion, is the breadth. If we look at it, it's not really getting better. It's actually just kind of getting a little worse. But we are rotating, and that rotating is keeping us alive, making us hit all-time highs. If we just did the simple things and just looked at the breadth, for example, we can see that it's actually coming down. And I think that's pretty telling. But the market doesn't really seem to care right now, and it just keeps grinding higher. We seem to be climbing that wall of worry. Here is my concern with this. If I had to give you one, if you look right in here, you're getting what I refer to as just that frozen rope pattern. And pretty much everybody refers to it as a frozen rope pattern. But if we went here, and let's just do this super quick, click on this. And then what I'd like to do is just get rid of the colors and we'll make them just white. So it stands out and that there's no judgment on what it is. But you see how tight this is getting on the way up? So these are called frozen ropes. And they're called frozen ropes just because they're super tight, meaning this is what they do. And they work until they don't work. And so what we really want to do is just be cognizant of that. I think there's something here that we have to watch, and I think you're setting up here for something. So if we take a look, for example, at what moved today, it was definitely different things that we're not used to, but at the same time, let's go take a look at let's start here because I think that this was really telling. If we go and take a look at all our sectors, meaning all that whole 40 sectors that we look at, I think there's definitely something to that when we dive into this. So if I change this one out, we're going to pop URA in, and we went over this URA on Saturday, and let's drop that down to a line. And you're going to have to just deal with the raw unedited version of this because I have a tremendous amount to do, and I still have a lot of trades on after hours. So if we take a look back, and we talked about this from the 8th on, and the 8th gets us to that Monday. So let's go to that 8th right now, and you can see what's happening. And it is very clear that uranium has been leading, but secondarily, you're seeing the crypto names and gold have been leading, followed by China. And I think China's setting up to have some issues, but look what else is starting to really lift up here out of that week. So I'm just taking the full week, and I'm taking 40, but let's look at what else is going on here. Utilities, the XLC names, IGV names, the SOX. Like, this is not a defensive stance. So let's take just a second to understand that this is not defensive. This is offense. This is all offense all the time. It's what I would refer to as default aggressive. They are buying high beta names again, and they are mixing in gold because, why not? But what's most important is this. If we just zoom in and say, okay, on the day out of our 40 sectors, what led? Uranium. And again, we did go over uranium, gold, even in the public as well. So make sure you watch Saturday's public video. Make sure you subscribe to this channel. We go over this. It's extremely actionable for the public videos. So I would follow along. The SOX, there's a lot going on here. It's all gas all the time right now. And I don't think that people are understanding that. There's a couple reasons for this. First, let's dive into what happened. Uranium absolutely exploded today. And this was something that's been grinding for some time. And we could see it getting tighter and tighter in here. And then this is just a very clean breakout. Now, why is that happening? Well, the U.S. has stated that they're going to start making it much easier for regulatory concerns in the uranium space. And they also have agreed to a couple things with the UK. Therefore, this is going to push forward. So it's not very surprising that we're seeing this happen. That's the first thing. If you start looking at how some of those names are going, they're just absolute gangbusters. This is the largest position that I have in uranium right now, and it's this OKLO. And it's crazy to me, but it's acting the best. So I'm just going off the technicals and the fact that the macro of the space, but I have no revenue. There's nothing to this company. At any minute you could argue the valuation should be 20 or, 2,000, but all you're really trading is air. So to sit here and justify it's kind of silly. You could always bake in how much they're supposed to earn. A lot of things are supposed to happen. I'm still waiting for Giselle to call. So if we start seeing this play out, an interesting statistic, I guess I could give you this one. Anytime you get over 90 for the first time, meaning the first break over 90, there's a 70% chance that you're going to 100. So from 90 to 100 on the first move, there's a 70% chance of that, not within any specific time period. But it does tend to happen and does tend to gravitate. It's pretty interesting that it does that. And I don't think I'm really going out on a limb here. I told the guys in the room and guys in the general sense, because there's a lot of girls in there too, that, you get about a 70% chance of this happening in the short term. And I think that's pretty valid if you go back and look at the study. I think the study was done over like 2 or 3 decades. Pretty interesting, actually. But when we look at this, we see clear breakouts, absolute clear breakouts. Take a look at some of these other names today that are in the space, and you just expect them to fall apart. AVGO did not fall apart today. NVIDIA, for example, really bad news. China's going to come after them. Antitrust this, antitrust that, blah, blah, blah. Okay. So this was a gift this morning pre-market. And, I say this to everybody, and I'm going to say it again. If you're in this, look at this at the end of the day. I mean, the market on close orders, wow, it's crazy. If you look at something like this and you watch how this is acting on news and you are trading, the fact that you're trading on a platform, if you're day trading, even short-term trading, if you do not have access to overnight, after hours, or pre-market, you're doing yourself a huge disservice. And, every morning I'm up at 5. You literally walked in this morning and you're buying this thing at $72, 72 and 3/4, I think I paid. It's just silly. And you have all these imbalances and overnights based upon what's going on in Asia. Now, I could have paid 72 and 3/4 and then all of a sudden gotten clipped at, 68. It could have happened, sure, of course. But that by 7 o'clock, you're going to get all the hoople heads that are going to start jumping in because it's cheap. And that's exactly what they do. So just by getting yourself access, you're giving yourself an edge. And that's definitely something that I would pay very close attention to. So we know that uranium's moving. The other thing that we saw that was on that list was the stocks. And if we take a look at semiconductors right now, and we look at what's going on there, we can see that semiconductors are grinding higher and they are breaking out. There's that classic W breakout into this, and you are pushing. So is that going to go? Is that not going to go? That is definitely something there that we would have to watch. But yeah, I mean, it looks pretty good and it's broadening out. So we are getting the pieces put in together here. And by broadening out, it's very clear that people are buying Micron again. And the names I'm going to go over, I am long. If I'm not, I'll just tell you. But Micron, I have a position, and we had a position over this breakout. It was pretty obvious it was going higher. SanDisk, I have a formal position in today. I had an informal one for a while, but nobody's getting this stuff yet. And they're going to understand the amount of memory that you're going to need to run AI. And, I can't stress this enough, guys. When you go out there and you listen to people that tell you like Oracle's not going to get the AI order, it's the same people that told you CoreWeave wasn't a real company. They told you that NVIDIA was selling the CoreWeave and they're doing it through Singapore through a mailbox, and it's two guys exchanging the chips back and forth, right? Remember all those people 2 years ago? So they kept a lot of people out of these moves because they didn't know what they were talking about. And I guess they were, I don't know what their motives truly were in doing that. But, they got a lot of people there, and a lot of people missed from 37 to 177 because they heard it was a scam. Doesn't really look like a scam. If it is, it's probably going to be, a multi-decade scam. So you'd probably be better off being long it. If you take a look at CoreWeave, for example, same thing, no one believes in it. And then all of a sudden it comes around and it does the simplest things. So you'll start seeing pattern after pattern after pattern the longer you do this. You just watch them break the IPO VWAP and then see how they act. AX fails, AX breaks out, earnings, boom, and look at the move. So again, pattern recognition. So where I'm going with this is the same people that are telling you that Oracle, they're never going to get those OpenAI orders. Okay, are they involved in the talks? Like, how would they know that they're not going to get those orders? Meanwhile, people are selling Oracle and selling this whole AI trade. And meanwhile, if you go out there and look at it, the actual corporations that are to supply the technology are ramping up their factories. So you can either listen to the guy at Twitter that's living in his mom's basement eating Hot Pockets, or you could watch Samsung that's saying, hey, we need to fire up all this DRAM again because we have massive DRAM demand, and it's all because of the storage and memory that's going to be needed for AI. I don't think they're in with the guy on Twitter saying this. I think that they wouldn't risk billions of dollars, right? And so that's going to lead to names like ASML breaking out and people not really understanding why ASML is breaking out, because you're going to need the lithography machines to do what? To make the chips that the guy on Twitter is telling you that you're not going to make. See how deep this conspiracy goes with the Twitter guy and how deep they are? So once you start connecting the dots, the actual dots here, you can just start seeing what's actually happening in the market. So we are seeing ASML break out. And then guess what you need if you're going to buy a lithography machine? You're going to need semiconductor equipment. KLAC, all-time highs. Lam Research, all-time highs. I'd pay attention to this more than, Freddy Fingers on Twitter. Just you do what you're comfortable with. That's all this is information and education. I know I sound a little crotchety today. I think I am. I think I'm super annoyed by the amount of just like misinformation that I see that's on there. And then people just go, oh, well, this guy said, like, you don't even know who that guy is. It's ridiculous. Anyway, if you look at something like an Oracle, to think that, Larry Ellison and all these people are just making stuff up and throwing it against the wall, that's where the delusion is. So I try to be as objective as I possibly can with this stuff, but there does come a point where, some of this stuff is pretty darn subjective. And I can tell you firsthand, I'll take this side of the trade. You guys can take the other one, and we'll see how it goes in a year. I remember when the video started, while I'm on this rant, and I remember people coming out and saying that, oh, it's going to fade, it's going to fade. And I was saying back here that now it's probably going to be bigger than Apple, and people aren't getting this movement yet. And now you're at a place where this thing's trading at 25 times earnings, and people are still saying it's too high. So this stuff can always go longer than you think it can, and it can always take longer than you think it can for the cycle to be complete. In other words, we always think it's going to be super fast and then over. It usually takes longer for implementation of any technology. If you traded during the 90s and you watched how long it took for websites to really get embedded in our lives, it's the same thing. It's no different. But where I'm going with this and where I'm going to get back to after the rant is to take a look at names like URA and this whole space. Look at the sectors that are out there. Whether you're looking at the LEUs or any of them, it doesn't really matter. They're just breaking out. Now, what I do find interesting is that gold is just, anything like this. The gold miners are just on absolute fire, and it's really not stopping. It just keeps pushing along and chugging along ever since it broke out. And the question with this would be, well, does it really matter? And the answer is, of course it matters, right? Because you want to be involved in these kinds of names. But I don't think that gold's moving up for the same reason as the inflation trade. I think gold's moving up as more of like a hedge against the dollar. And I don't know that that's the same thing. In other words, we have instability with the admin right now, and people are looking at that instability and saying, I want to have more of a hedge in gold because of that. I don't know how much of it is inflation. You can always comment on that below, but that's really where my head is with it. And I think that when you look at that and you look at like the 10-year, and you're watching the 10-year not able to break that 4%, it's very telling. Now, there's a couple other names I really want to go over for you guys before we go any further, but I do want to show you a couple other things on a macro scale. And I just want to point out that with Wednesday in the FOMC, you can break 4%. The number right now for him to come out and state that he's going to only cut 25 basis points, I think it's at 96% right now, or 93%. I do think he only does 25 basis points. I don't think it's a 7% chance or a 5% chance that he does 50 basis points. I think it's a lot higher. And the other thing you have to realize is that we get a dot plot where all the Feds show their little plots on how they see the year playing out. And that's going to be absolutely huge for us, guys. And that's certainly something we're going to want to pay attention to. But take a look at this before we go any further. So in front of you is the New York Stock Exchange. Now, below is the McClellan Summation Index, and I'm rolling over. So all this is broadening out, and the rotation's getting worse, and we're pushing higher. And I'm seeing a rotation into some defensive, and I'll show you what I mean by that. But there is a rotation here, and this is getting, I guess, maybe we could say frothy or speculative. I don't really know the word yet, but I like what I'm seeing in the market. I do. And we are pushing, and the themes are there. But if I look at something like this, I am below the zero line in here, and this is the summation. So when you are below this, you do tend to start having some bad times, or at least go sideways. Now, we're not really doing that in here at all. We're actually coming back through it and acting fairly nice. I'm kind of surprised by this, because this usually does lead to some kind of weakness in the market, and it's just not doing it yet. So is this that rotation? Is this a precursor for things to come? We're going to have to play and see how this plays out. But when I look at something like this, these cuts, and it's not always this violent, just to be clear, it's not always that violent, the movement. But when you're just sitting here and you're trying to get through like something like this on the zero line, it does tend to give us a position. Let me just shrink this down so you can see what I mean. It does tend to mean that down the line, you tend to roll over in the next month or two, in a couple months. And it doesn't mean that it's got to be a long time, but if you look at something like this, for example, this is where you broke on the zero line. I'll move that up to where it broke exactly there, because you'll see my point. Here we are on March 23. And then you come here, and then it took till July 23 for it to flip back over, and that's when you made a high. And then if you were to take this level again in August 23, and we just took from there till you flipped back over, that's going to get you December. So it tends to mark highs, and then you kind of go sideways and then go from there. But we're not really seeing that rollover. We're seeing the exact opposite of that, and I think it was worth pointing out. I expected to look at this today, and I waited a little bit for this to close before I even did it. And then this is exactly what I saw. So I thought that was pretty interesting. There's some names out there that are clearly rolling over that I think are worth paying attention to. And then there's some names out there that are just crushing shorts. APP was a huge short position by pretty much everybody in this area, where they all said it was going to get delisted and everything else was wrong with it. Facebook was never going to run their ads again. And I think they shorted around 3 something. And, now you're at 6. So Absolutely dead wrong on that one. And you could just see it got added to the S&P 500 and you're just ripping. I mean, if you're short this, you're just every day. I don't know what you're doing. I really don't. I don't know what you're hoping for here. But now you're breaking out all-time highs and they're added. Super important when you start seeing this stuff because it makes me think, are we getting new leaders? So then you look at something like a Arete. And for the longest time, I'm under the belief that, man, like everybody else, boy, we're not going to see that anytime soon. And then you're just, you build this huge cup, you break out on earnings. And from that earnings, you never really looked back. You just kept pushing and you came all the way back up to that level, retested it, and then you just flipped. And now you're closing at an all-time high close today. Super interesting to see some of these names closing at all-time highs. And then it makes you wonder, are we losing, some of the leaders from before? And are these new leaders? It's hard for me to say like OKLO is a new leader when it has no revenue. That's very difficult to say that this is going to be around for some time if it doesn't have any revenue. But you look at something like this RKLB tonight that came out and they did a secondary. And I think that's really one of my key issues is that we're seeing more and more secondaries. So as we see the secondaries, that usually means that they must feel that their stock's expensive and they're willing to get out of some of their stock at these levels. But here's where it gets even more interesting. News on both sides of the aisle is not having the same effect. And I'll explain what I mean by that. In other words, you are breaking out and then you're just coming right back down. You're breaking out and then you're just coming right back down on this. So from my perspective, what does this mean? It means that I had really good news today from Tesla. It was confirmed the guy's buying stock in the open market. Old Tesla, you would have gotten a week out of this. All we did was break out of a base because it clearly leaked ahead of time. Obviously it was on the trading desk and it very clearly leaked. And then it comes out and it's just a sell the news event because they're like, oh, he's just buying more stock. That was very surprising. The blow off of NVIDIA was also very surprising in my opinion, how they just completely, utterly blew that off. I do think that when you look at this, that's kind of how you put a top in. Now, to be clear, if I look at this 90 on a 4-hour, and you have the patience to wait, you'll see this. But it also means that when it starts to break, it gets super ugly. So I saw a lot of selling today, a lot. And we actually did a trade at the end of the day here. That's the other thing I want to point out that I'm noticing. Because I'm trying to do these videos to give you something actionable for tomorrow. And I'll show you this, but what you saw here today, like this break, that's what all I was looking for. So I'll show you what I was, and then you can go and replicate it yourself. So you have you open up, here's your hourly, and then you form, and then you have an inside bar. So all you have is this at the time, and that's all you have. And then it goes to this. And so now I have another inside bar. See that bar right there? That's what you're looking for. I was going to save this for an actual lesson. And if you want to see a lesson on it, if it's interesting, let me know and I'll do a full video on it. So here you are, inside bar. And as soon as that happens, you can see the timestamps up here. That's my symbol on TradingView if you want to follow me on TradingView as well. Some people do because I put scripts out and watch lists, etc. And you can see the timing. So the time changes. It takes about a half hour for it to play out. And then I want to point this out too. And has anyone noticed that the first half hour is turning into the first half hour and the first hour is not really where the action is anymore? Anyone notice that it's starting to shift and that you're becoming more profitable? I look at my trades per hour, like profitability per hour for day trades. And I can tell you that the profitability of the tradings, it's shifting It's shifting towards the more in the lunchtime, 11:30 to 1, 2 o'clock. I noticed that. I don't know if anybody else is picking up on that or not. I'd be interested if you drop that below. But the first half hour where it's like, oh, trade for the first hour and then go to lunch, it seems like that window is getting a little bit stronger. We made a decision. So I had the 400 puts earlier. I did try 2 other tries in this earlier. And one I broke out at break even. The other one I took a loss on. But to me, it was pretty clear that the money to be made was going to be on the downside. You have your hourly red bar right here. You really needed an engulfing to really reset the whole thing, and you just don't get it. Once that broke, that was it. You knew from there that you had it. So I bought the 400 puts, but I didn't know if I was just going to go sideways and just bleed. So I sold the 120 calls to open against it. And just that way I could just pay down the theta and the implied vol decay. And then it was just a super easy short from there. And I just put out these little alerts so that people know what I'm doing. Because I don't know how it's going to get, and the spelling's wrong. I know, you don't have to put that in the comments. I have sausage fingers. And then as it just kind of works its way down, it just put out, hey, time to trim, or these are areas of interest. You start seeing it break down here at that 411. It tries to form, And then you start seeing the RSI try to hold, but it can't really get its life together. Like some people I know. And then you start seeing here at that 411, seeing bigger calls so far, billion notional puke today. So while I'm doing this, I do look at the option volatility, and I do look at the big order size, and I do look at notional, and I look at notional on a relative basis. I'm not going to get into it now, but I do look at, people always look at like, oh, the calls and the puts, and I always say things like, what's the notional value? And if you don't know what the notional value is, then you don't even know if what you're looking at relative to the other day, if it even matters or not, right? So everything's got to be comparable. 11 up on the short, out, trimmed, hit across the board. So you can see how we're getting weaker and weaker. And then eventually it just keeps getting weaker. And all I'm doing here is just moving a trail down. So I'm just literally going, all right, so from here you can see it, bear flag breaks. That's the top of the flag, stop. All right, so we try again, breaks. That's your new stop. Breaks again. The top of that flag, the flag, not the pole, becomes my stop. Tries again, fails, new low, that becomes my stop. So all I'm doing is moving my stop down the entire time, right? And then we were up. By the time I got out of it, I sold the calls in half. I think I sold the calls for 12, bought them back for 6. And then the puts were basically a double there, and I trimmed a bunch, and then it bounced and I just got out from there. But the purpose of me showing this is when you look at this stuff later in the day, like just watch it play out for a second, what you're seeing is, these movements are happening later in the day. It's not the same kind of movement. So I would pay attention to this kind of stuff, and I would certainly understand that you're going through something with these mid and smaller cap names that are setting up and really breaking out and looking fantastic. After earnings, you start looking at these, the breaks and the retests, and you are leaning again towards some of these semis. But, no one's still looking at this stuff. Like no one's paying attention to the fact that of AEO and the fact that these things are like breaking out. These genes aren't going anywhere. And I think we're seeing rotation. This is what I think we're going through. I think we're seeing rotation. And I think the one thing that's really keeping us afloat is the rotation into these smaller and mid-cap names as well, because you have some real story stocks out there. And I think that's really what's driving some of the growth. We still have to get through Wednesday, obviously. That is it.